let's finish off strong today on mortgage rates. Okay, we're kind of been talking a little bit about this all throughout today's show, but mortgage rates hit their lowest level finally this year since February of 23.
It's about time, and you know what? I think it's been since freaking March, and they started increasing. So I like the way they kind of spin it here, but it's been a minute since we've seen these low interest rates. But it is a relief, Andy. It is. You know, last year we're seeing around the same time, September, October. Remember, October was brutal.
Yeah.
We're seeing the rates high 7s, low 8s.
Yeah, we should have like a memorial service in October for mortgage rates.
That was brutal. It was like an eerie, like, you know, when something really bad happens, like nobody's doing anything. That's how it felt that last year, you know? It's like, yo, what happened? Everything just came to a standstill.
You know, there's a scene at the end of the Avengers movie after like New York City gets attached and they're like sitting at the end of the credits and they're all sitting in the shawarma shop and they're just like, it's just all quiet and they're all just eating. I'm like, okay. Oh man, we just really went through this really crazy thing, and they're all just sitting there eating like.
Yeah,
that was October. That was
brutal.
That was brutal. Actually, I think maybe I should say that was the November after the October of 23.
Yeah.
So mortgage rates are going down. It's kind of started in August. This is a look back article because we're looking in the rearview mirror on what had happened. You and I both saw on the nerd side, Treasury yield totally got better, and then Treasury yield dumps into mortgage rates.
Yeah, tell us, you know, Andy, I actually put right there. Andy, please tell us more about this. What's you know, because you are the nerd when it comes to that.
So the best way I can probably describe this is it's a fine balancing act. If you do too much on one side of the scale, then it means something over here. Do something too much on this side of the scale, it means something over here. So there's this like dance between money exchanging hands and money, the cost of that money exchanging hands, and who holds our debt, and how much of their debt they hold, and how much debt we allow ourselves to get into as a nation. Now, when you see the bond market react to certain economic news or banking news or risk factors, people rebalance their risk. And when countries or hedge funds or individuals or investors rebalance their risk, it translates into things in the market that we then go price out, such as mortgages. So the way I like to describe this is when you see a big basket of money that gets more money dumped into it, then I can offer that money to lend to you cheaper. When there's scarcity of that money and that basket of money gets smaller and smaller, in order to lend it out, I have to charge you more. And so what happened in August is we saw the market have more activity in a favorable way for mortgage rates because we had more activity. So some of that is going to go all the way to the Japanese market and some things that were happening there. That's not for this show, but just know that August was when that started happening. Gotcha. And I know we went from just a handful of refinances to like 19 or something crazy like that.
We were also running a special
in 2 days, in like 2 days.
Yeah.
And it's because people could qualify. So people who bought in like 22 or 23 and had like a high rate, they got that VA that VA IRRRL because the mortgage rates went and like kind of like they just like dumped down for a minute and kind of stayed there. And then we just brought all these people that were our past clients into that, and now they're saving a bunch of money.
Yeah, no, exactly. So the Treasury bill is the best way to determine
the 10-year Treasury. So the 10-year Treasury is what I look at, I'll say almost daily, because some days there's nothing to look at it for. But the 10-year yield is what I watch in order to know which way mortgage rates are going. And of course, our own monitoring service that we pay for and subscribe to tells us which way the mortgage market specifically is going up, down, or sideways.
But it's all about the Treasury.
It really is. It is a good barometer of kind of where the market foresees things going and what it's reacting to in the rearview mirror as well. Like, oh, that had happened. Okay, we're going to do this next based on projecting where I think that's what the ripple effect and cause is going to be. What that means for you on the consumer side is that with mortgage rates going down, a couple things are going to happen. You're going to see more buyers probably come back to the market in the fall. Yeah, we talked about inventory already in the show. We talked about equity in the show, and we're talking about refinancing in the show. You're going to see mortgage applications probably tick up. Yep. And you already see here that they were up 106% than 1 year ago, which is basically a doubling. But this goes back to my point. It's because people need to refinance. Yeah. This isn't because all of a sudden everyone at the same time was like, oh, now everyone on the planet wants to buy a house. No, there's people that own houses that are refinancing because they're in trouble. Yeah. I like how it says that may sound like a massive increase, but the numbers were so low last year that it even just... It was like doubling from 2 to 4. Isn't that notable?
That's 100%. That's like more than 100%. But no, absolutely. You know, last month when the rate started dipping, and again, I like to use this. Like people think, well, the Fed reduced the Fed funds rate. Now rates are going to go down. The rates have started going down, and the Fed still hasn't reduced the Fed funds rate. Yeah. So remember that, people. Like, yeah, as much as we want to think they're the ones that influence all this, it's not like that. It's all about the jobs. It's all about what's going on in the market, you know, and what's going around worldwide.
Yeah,
you know, all these things matter. So yes, to your point, we got super slammed, thank goodness. And that was because we were, you know, able to refinance people, especially our VAs. They were having 6.8, 7.5. We reduced, you know, 5.25 for conforming loan limits. Again, that's any loan, 766. I'll keep it short, 766 or under. That's a conforming. What that means, it conforms nationwide. So therefore, the interest rates are more favorable for that. Then you have high balance. That's any loan above that 766, okay, 550. So any loan above that is actually going to be considered a high balance, and therefore the interest rate is going to be higher. Okay. Usually that's because on the conforming loan limits, a mortgage becomes a mortgage-backed security and it actually sells off in the secondary market, where a high balance will actually have to be a particular investor that's willing to service that loan and not sell it off, etc.
They're effectively two different baskets of money.
Very effectively two baskets of money.
Yep.
And that's why you'll see, like on our high balance, we're locking people in 5.625, 5.75, no points, no nothing, like no charge to them. We're skipping the 2 months payment, giving them their escrow money back. So a lot of times they were using that. A lot of these people felt very relieved because they're like, if my payment's like $6,000. Well, we had one where it's a loan for 1.5. Imagine the taxes.
Oh, yeah. The tax.
Just the tax alone, he's getting a huge refund, like $12,000. And then skipping a payment where his payment's $12,000. That's like, I tell the client, like, that's like a miniature cash out.
He's netting like 23.
No, 20, higher than that. Andy, it was like, it's like close to 40 grand.
Wait, what?
Because it's 2 months. In 2 months, it was 12,000 and change.
I'm sorry.
And then they're getting another, I want to say it was like 13, 12.
I was adding the one plus the tax the recapture.
They're getting that. Yeah. So they're getting, it's like.
Wow, that is close to 40.
Yeah, so he was like, I go consider this like a miniature cash out without having to go with the higher interest rate.
So what's financing his new escrow account then? His new impound account?
We're doing the new one, yeah. So your loan will increase because we're impounding that again, but we're giving him a refund.
Got it.
So the whole thing is like, if you use that and you put that all back to your principal, it's like you didn't pay nothing for a refinance.
That's crazy. Wow.
In this case, utilize that to pay off. And again, I run the credit, we analyze it, we see like where you can start paying these things off and save even more money than what we've already done based on reducing the rate.
So given the nature of like that example and the whole mortgage rates being the lowest since February of 23, like kind of looking at out the windshield of this, like what else do you think is on the horizon for people that maybe we just aren't talking about here yet that we should be talking about?
You know, I think the next thing that people are going to start considering is obviously here in San Diego. I don't want to say the nationwide. I like to stick here in, this community because I understand it, but I think, I don't know what's in the horizon. I just think there's going to be more activity as we move forward. I think we're going to start seeing bidding wars again.
Oh,
when the rates get, even reduced even more so. Not this time around, but I'm thinking November-ish, I think we're going to see an uptick.
Do you think it's a little too far of a stretch to say we'll see 5% or high 4s in government loans like FHA?
In government loans, we're already there.
Is that wait? What?
We're already in the fives.
Wait, without buying? No. 5% or below.
Below? Yeah, no,
buying points?
No, without buying points. I'm sorry. Okay, without buying points, I think on the next turnaround when the Fed starts talking about it, I just think a lot has to do also with elections. We'll see what happens.
Sorry, I didn't preface that. I meant without buying discount points.
Correct.
Like just par pricing.
Got it.
What do you think would maybe bring us to that point where 5% on the nose?
I don't know. I'm thinking sometime like I don't know.
And it's okay. I'm gonna say
if I'm curious with that, I would say it's gonna be January, February-ish of next year.
Okay.
Well, we'll start seeing kind of that.
It's not too far away. I mean, it sounds like it's far away, but it's really not.
Yeah. And again, the whole elections has a huge impact in all of this.
Yeah.
Remember, we got one of the most influential men there, which is Jerome Powell. Mm-hmm. And then we have the most important person in the whole world, which is Janet Yellen.
Janet Yellen.
You know what I mean? And so depending what the new presidency has her do, print more money, we get to see what's going to happen.
I don't know, man.
So we'll see.
We're
not getting into politics, but what I'm saying is these things have a huge influence in what direction we're going to go.
They absolutely do. I am encouraged by the direction of the market, and that is what brought this to the table, is because there's real solutions available to people. I know that it's not super sexy, and it isn't that much of a good clickbait title, but the point is having an effective solution for you and your home ownership, not to just try to get 10 million views on something for the sake of saying we did it. It's how can we affect change in your personal life and in your home ownership?
Yeah, exactly.
So, mortgage rates going in that positive direction and being a little lower now than they were just a couple months ago, and then maybe even going even further coming up soon. I think that's going to be a nice relief for people. I don't mean just for us. I think it's going to be a relief for the market the housing market in general. Yeah.
One thing I will say, Andy, is based on what happened since the Fed started increasing the rates back in March of 2022, I do feel a big sense of relief.
Yeah.
I think the hard times have already passed us.
Yeah.
I think now as we move forward, there is light at the end of the tunnel.
Yeah.
And we'll start seeing a little more normalcy kind of things getting back together. Then
it was a 2.5 year slowdown, man.
No, it was big time. And then new rules, right? Like the new rule that we have for real estate where the buyers have to pay their own commission. Right. A lot of things are changing, a lot of things. So we got to consider and factor those things in. There's still a lot of home buyers right now out there that are probably considering buying and don't even know what changes there is.
Did you see that really funny meme of the house that you can't advertise how much the buyer's agent is going to be paid for your listing, and it's a drone photo of the house in the backyard and the grass 3%. Just says 3%.
I love that.
I love it.
How to get creative, right? And that's on your MLS picture right there.
Yeah, an aerial photo of your house. Just, 3% cut in the grass.
I go back to this, Andy. If you were to take a guess as we move forward, obviously your daughters are going to buy their home.
Yes.
Right? And I'm going to say that's probably going to take them another 5-6 years. Would you agree?
Yeah, our oldest probably by the time she's 25. Yeah.
Okay.
Yeah,
So
I'd
5-6 years more or less. Do you think it's going to be easier for her to purchase her home?
The market rules will not be easier, but her situation might make it easier.
Yeah.
Yeah.
You see what I'm saying?
Yeah.
I don't think as we move forward, I know now I'm a grandparent.
Yeah.
I think it's going to be a lot more difficult for them.
Oh, yeah.
And so that's why now we try to figure out a way how to set them up.
Well, I answered your question the way I answered it on purpose, is because the market conditions are going to make it more difficult for buyers.
Yes.
But as legacy leavers, we're going to make it easier on our kids.
Correct.
Not to give them a golden spoon, but to aid and guide and help them so that they can have. Yeah. I mean, that's why we do all the things we're doing right now, is so that we'll be in a position to be able to do that with them and for them.
Absolutely. No. This is carrying the baton. You know what I mean? Yeah. When you're doing the 4x4, right? I am the first leg right now.
Boom.
I still not releasing that baton yet.
Yeah.
Yeah.
But
that's what it is. And you're just hoping that you raise your children well enough for them to understand the value of these things.
Yeah.
So when you do hand them over that baton, they're going to pass on that tradition and make that generation that much better.
And position ourselves to be able to be in a position to do that too.
Absolutely.
I think that, in shows like this where people talk about the market and real estate, and we don't talk about like maybe the heart side of it or the legacy side of like actually creating that, but that's a motivator for me. I know that's a motivator for you.
Oh my goodness.
But, even like that can sometimes probably not come through in this conversation we have with people either, because we're just talking about all this other stuff. But I mean, we're driven and motivated by those things for our own personal reasons.
You know what? I'm glad you brought that up, because those are things that a lot of people, we come in here, we talk about the markets. This is now aside from these things.
Yeah.
But I was speaking with Tanya last week, and I was just telling her, isn't it cool? Like I did my ADU on my house. It was pretty cool that we did that, right? Yeah. But now we're going and we're taking it a step further, where I'm building 2 ADUs now. And again, giving back to the community. So when I look at my contractor and I look at our WhatsApp, because it gives me, what's been done on a daily basis, I look at that and I told Tanya, you don't even know that you're building something right now. Like, right? Like, she doesn't even know. I know because I visit the site every Wednesday. I go in there,
of it, yeah.
and we're in week 7, by the way, going into week 8 now. And she doesn't realize that because we're still here at the office doing what we're supposed to do.
It's happening over there. Yeah,
exactly. And I'm a big believer in the big man upstairs. And one of my prayers is, thank you for allowing me to wake up above ground. Thank you for giving me the mindset to want to make a difference, not only for myself, but for others.
Yeah.
Right. And so that's how I start my prayer. And doing this ADU, I bring that up is because all this information is data that I'm going to give our homeowners, our clients, to inspire them that it could be difficult right now, but there is light at the end of the tunnel.
Yeah.
Like, we'll have more value to add on to this and hopefully share it. And we'll be sharing these videos as we move forward.
Yeah.
Hasn't happened yet because we're putting everything together.
Well, you're cataloging it. It's not.
We are.
It's already being built. You're doing it every single week.
Yes.
You've been staying on top of it. So it's going to be really fun to show that to everybody at the end.
And again, I do this for my community. I do this because I want legacies to be changed. I get passionate when my clients tell me, Will, thank you for that advice. I followed that. And when I fast forward 8-9 months later and I see the difference, that's all I love seeing.
Yeah, and the story certainly is far from over. I mean,
my goodness, we're barely starting.
There's no way that you're going to be this excited about this thing and you're like, yeah, I did that, I'm done. Like,
nope.
No, you're already like headlong into a whole new direction and adding a whole separate division of what we do.
Yeah.
So we're going to have a lot more of that to talk about.
I'm telling you, I'm so excited. Andy, I just had an investor come up to us. They have a property there on J Street, downtown. It's a little over an acre with feasibility study already to do 36 units and is looking for a partner.
What?
That's with the little things that we've started.
Oh, dude.
Land is free and clear already. Clients in Turkey, they don't have sets of eyes and ears that they can trust. And we've worked together. I got him in his home in Poway in 2019. And because of the relationship factor, he's like, well, I'd like to partner up with you. So now here we are.
That's so rad.
Here we go.
That's so rad.
Great opportunities will come. Be patient and start looking for them. Yeah. You never know. If you don't ask, you'll never, ever know.
And the unspoken part of that, other side of that, be patient. The unspoken part is being ready. And
That's it.
You've made yourself ready and available. And that is why opportunities like this, when they do come up, you can take action
That's
on
right.
it. So kudos to you and congratulations.
Well, hey, thank you for all that information. Aside from this, that was just personal. This is just raw stuff that we're going to share with you, and we're going to continue to share with you guys because we know how important it is.
Yeah.
We know how a lot of times the market, the people around you could just kind of put you in a different situation.
Yeah.
Well, we're in it too.
Yeah.
And we're learning to sacrifice, even relationships we sacrifice, just because we already know. We put our blinders on where we want to hit, where that vision's going to be. We just want to pass it on to you.
Yeah.